Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
And welcome to Markets Now. I'm Michelle with Scott Varilek of Kooima Varilek, and we're kind of seeing some mixed and quiet trade in grain and livestock futures this morning. And Scott, let's start off like we always do, talking about this cattle market. Back up into more contract and record highs this week. And of course, every pullback, I feel like a broken record, every pullback gets bought. This cattle market, how long can we keep up at these levels, do you think? I'm sure that's the question you get asked every day.
Yeah, and thanks for having me. And it's been quite a ride. And that is the biggest question because we're at high levels. It's been very challenging to market. Because we are handling so many dollars. We keep saying that over and over again. So there's a lot of anxiety wrapped into how high we can go. And that's a big loaded question. So we can start with, okay, what are the reasons we're here? The supply, the demand, both working in tandem, doing a great job. So the supply being this tight, it's been what the market has been telling us for a lot of years. We've had not a lot of profits in the cow calf industry. It's just been real sluggish. So that's what the market did: unwind, and now we're just to that alarming emergency level where you get this demand kicking in, and we don't have the supply. It's not there. And I keep seeing these cattle on feed reports. 98% on feed, 98. We're 6% below a year ago. Year to date on slaughter. So where are these numbers? I didn't see any 94% on feed numbers over and over again. So there's some numbers that don't jive there. That's a little off. We're very tight and staying very tight. So how high can we go? Nobody really knows that answer. But I mean, if you want to start looking at charts and try to come up with numbers, yeah, you can come up with them. Next measurements I got, because we're through everything, is 264 fats and 388 feeders. So that's my next technical spots I would look at. But you think, wow, that's a long ways. It's hard to say those numbers. They're so high, but putting on $20 in the feeders in 4 days, that's something we've not really seen. We're already at high levels and can do that. So cash feeders leading the charge there as well.
Absolutely. And I really feel like not only is the tight supply pushing the cash feeder market, but we got that news from USDA that, hey, we're not going to open the border to Mexican feeder cattle until we get this screwworm thing pushed back. How bullish has that been for the market this week?
Yeah, that was a big day, that announcement. I think everybody was geared up. The expectations of the announcements was, this is our phase for opening up the border, 2 more numbers. And as it went on, you could start to feel it that, okay, they're not going to announce anything about opening it yet. And the market turned on a dime, and everybody was carrying some extra shorts into that, that press conference. And we had to quick get out of some of those. That's what the feeling was, like, okay, they're not announcing it, we got to go higher. And, that's remaining friendly to this market. We've got, all of these tariff wars going on, that Donald Trump has in the works. He wants the United States to be in the production. We want to do it here at home, and that stands for the cattle industry too. He doesn't want us reliant on another country, and we kind of got ourselves there, being reliant on bringing in all of these feeder calves from Mexico. So maybe that's another reason to say, hey, let's just leave that shut. And that's your future, your dangled carrot. If we're going to rebuild this herd, we need to know that it's going to be good for a while. If you're going to stick your neck out there on buying some bred animals or trying to boost the numbers, you need to know that it's going to stay good for a while. And some of that news kind of does. We've got a president that wants it here in the United States. We're getting some profit, so it's starting to feel like, hey, maybe this is going to be good for a little bit longer than we thought.
No doubt. Cash market news has been a little light, but steady to some higher money. Is that where we're at?
Yeah, it's the news is a little slow. It has been steady to higher. So this is about the 5th week in a row. The north is kind of dangling around this 245 area. It's the bids are there. There's a few sales, and then you hear of one sale of 247 that happened, or another regional dipping into Kansas for 245. So those are kind of the prices. That's the range we're in. I think there's some expectations we can get 247 to 248 this week. Yet to be seen. Some has leaked along the way. Packers trying to keep it reined in, and it's just odd. We're past that where they can buy cattle for this Labor Day demand. So you would expect maybe these prices to drop a little bit seasonally, but not doing so. And I think there's that anticipation that fourth quarter is going to be tight again. We're going to be good. Maybe the futures market already knows that and is trying to keep this up, on the board, and cash staying on is good. And then see what our demand does after we get past Labor Day.
Okay, let's talk about demand. It's been strong. That's the other equation, part of the equation that's been holding up this market. You've got choice boxes at $408. And so that's helping to drive this too, isn't it?
Yeah, beef demand has been great. For one, we've got a consumer that, for health reasons has found out what a good source of protein and food that beef is. And when you get that into the stores, everybody wants beef in their diets. And rightfully so. We've known that all along. So finally, it's getting some good press, getting action, got a consumer that really wants it. Now, here we have this price starting to rise. It was first we ate into some the very large packer profits, and then we, start eating into some retail profits. And now these prices have to go higher on the beef. So now we're going to start to see them take this jump, and we'll see what kind of backlash we get. And for me, here's the story. My kids always looking for a pair of pliers. They're always stealing my pliers. Okay. And so I always, this is where we're going. So I always buy some extra pliers when I'm going through the tool shop. And these things used to be like $5 and now they're $12. The prices of everything has gone higher, and beef is going to need to too. I mean, there has to be those profits in it. How many TV subscriptions do we got? We've got all of this, and beef can't be the one thing that has to go cheap, because trying to find somebody that is willing to calve out these heifers, trying to find labor, a lot of different reasons. So I think these beef prices are going to have to be higher. And for me, I feel like we have a consumer that's used to paying higher prices all along. So I'm still feeling good and not seeing the big backlash yet.
Yeah, well, and not to pick on our turkey friends, but if you look at the average retail price for ground beef last month, $6.50, which is a record high, but I have to pay $5 for a pound of turkey. You know what I'm going to pick? So
that's right. I
just
think
a quick thing.
All
right, hog market, we're back up a little bit here today. I feel like cash market is starting to get really sloppy. You're seeing cutouts get sloppy. Is the only thing we can trade here the discount to the futures? Is that the only thing that's supportive right now or not?
I think the front month is feeling that. Usually October takes time to try to close some of the gap, and maybe we've gotten there. So I think the upfront story, we're still hanging on to some of those tighter supplies and disease issues, but further back, that's when the supply is starting to show up. We can find isoine, we can find feeders right now. Having to pay probably too much than what we would normally have to pay for right now, but I think we've got a bull spread type of market. I think the front's going to be able to try to eventually close some of this gap. But then by the time we get towards the end of the fourth quarter, I think numbers are going to be coming and being a lot more available. I think these farrowing units are really turning the crank. So I think the supply side is there. And, demand, I just kind of feel it's a little lackluster, trying to say that because beef's high, maybe pork can be higher. I can't come out and say that pork's going to get more demand just because beef's higher. I mean, it's going to at some point, but I don't know that we're seeing that yet. It has not been able to capitalize on some of this, some of that demand that maybe it should be, but so a little bit more sluggish. I think good in the front, but getting towards the end of the fourth quarter, I'm going to be pretty nervous.
Right. All right. We're getting a little bit of follow through in corn and soybeans after the higher day yesterday. 20-cent gains as we saw soybean oil surge on maybe these SRE announcements that could come out here today by the EPA. But let me ask you this. Do you think we have the biggest crop now already digested in the market, and the fact that the Pro Farmer Tour found maybe less than USDA expected Is that helping to bottom the market, or is this going to be demand that helps bottom it?
Yeah, so I think, we all were trying to pick a low. When's your harvest low going to be? Is it in September, the end of August? We're getting really close to that time frame where it's kind of any time, right? And we've heard about this big crop. I mean, we know it's a great crop. We've had a lot of moisture, so rain makes grain. I mean, that's for sure, what we're all trading and what we're looking at it. So I think the market has really heavily digested that, and maybe the, Pro Farmer Crop Tour out there makes a lot of noise. A lot of people like to look at it, like to follow it, and then you hear that there are some issues here and there, whether it's Illinois pulled back. So that's part of it. You say, okay, maybe not the most perfect conditions. So we had that bar set really high. So if you pull that down a little bit, that's just a little bit of a nugget. But for me, I'm looking at this demand and saying, hey, we've got a low price here already. And low prices cure low prices. And here we've got some demand kicking in. We get some really good exports for a couple of weeks in a row here. Seeing some flash sales happen. I think that's the biggest driver to some of this market moving higher. And then once you start to move it higher and a little bit of demand, then the next is the funds. We know the funds are heavily short. You start breaking out a few of these charts, getting through some of these resistance spots, you're seeing funds cover shorts here pretty quick. So this is the funds getting out of some shorts and moving this market higher. So now we have to kind of look, where can we go?
Yeah.
There's
what do you got for targets here? Because 1075 now that we got November above that 1050 level, or where?
Yeah, beans, they have a 1075 number. They had a really good USDA report. That's going to be good news that they can stand on. If we can get some decent demand news, yeah, I think 1075 could easily be the next spot that we're going to target. And for corn, that gap up there at 432 3/4, that seems like a long ways away, but I think it's fully possible if these funds keep covering shorts and we keep getting some of this demand.
All right. Well, you get your pom-poms out and we'll keep cheering for this market, right?
Sounds good.
Okay, you and your pliers. Okay, whatever. Thanks for joining us. Scott Varilek with Kooima Varilek. That is Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.